to make, keep, and grow your money. Learn about finance terms, principles, and practices. Today, we will answer to a basic question: why should I use a bank? This video will introduce some high-level financial concepts. I'm planning to add new videos to explain each concept. You are not obliged to use a bank for your money, but this can make your life easier. For each service provided by a bank, there are alternatives, so you have a choice. Personally, each time when I moved to a new country, the first thing I did was to open a bank account in my new town. A bank is a safe place to keep your money, especially large amounts of money that you don't want to store in your home. For the day-to-day life, it's easier to pay with a debit card or a credit card instead of carrying with you the actual money. When buying with a debit card, it will usually let you instantaneously transfer the existing money from your bank account to the merchant. When buying with a credit card, you are borrowing money from the bank under a promise that you will repay it within a certain timeline, according to the credit card contract. When you are buying using a large amount of money, like a car or an apartment, very likely that you will pay with an official or certified check or a bank draft. In both cases, the bank will ensure that the payer has enough money to pay and will set aside the amount to be paid. Plus, the check will be insured against loss or destruction, so no pressure on you. Usually, you can open a checking account for the day-to-day consumption, and it will come with a debit card. Most banks do have monthly fees for this type of account. To have a credit card, you need to apply for it and sign an agreement. Most of the credit cards are charging an interest rate for the money you are borrowing. It is expected to repay a part of its balance at the end of each month, or depending on your statement cycle. A bank offers the opportunity to grow your money. If you have some money to put aside, you can open a savings account, and depending on the account type, the bank will pay you a monthly or annual interest. Usually, it will be a percentage of your initial deposit. If the interest rates are covering the inflation rate, your money will not lose the value over the time. If you plan to invest for a longer term, you can choose between a large variety of types of investments that are more or less volatile, more or less fitting your risk tolerance level. In general, more money you want to make, more risk you have to take. A bank offers the opportunity to borrow money if you are qualifying. When buying or making a big investment, you can borrow money from a bank. The borrowing can take different forms: a credit card with a higher limit, a credit line, a personal loan, a lease like for a car, or a mortgage for an apartment or for a house. Questions to ask when choosing a bank. What is the bank's reputation? Is it safe? This is a very important step, as not all the banks are offering the same services, and some of them have a bad reputation, like poor customer service, higher fees, hidden fees. Do a search on the internet before and find out what are the client's opinions. Is my money protected by a regulatory body? I'm talking about laws, funds protection. For example, in Canada, most of the banks are regulated by the Financial Consumer Agency of Canada, and some accounts are eligible for deposit insurance from the Canada Deposit Insurance Corporation, up to a certain amount. What are the banking fees? Most of the banks are displaying the fees on their website or in their brochures. Attention to conditions and fine print fees that might come unexpectedly, for example, the overdraft fees. Can the bank decide to change the fees? Some of the banks can decide to change their fees and conditions with a reasonable notice. What are the contract terms, duration, penalties, etc.? Some banks are offering banking services at no fees if you are meeting some conditions, like you're a student, you keep a minimum account balance, and so on. When signing a contract with a bank, be careful, as some products are automatically renewed unless you are specifying otherwise. This might hurt if the fees are growing or the interest rates are shrinking. Are my gains taxable? Depending on your bank account type, the gains might be taxable or not, or the taxes might be deferred to a later time. For example, in Canada, we have the Registered Retirement Savings Plan, RRSP, or Tax-Free Saving Account, TFSA accounts. Is my investment or capital protected? Depending on the investment type, the initial investment or also the gains might be guaranteed by the bank. What is the best borrowing rate or the product I can get? Can I get a deal? Take your time and compare all the products in that category to get the best option. In some cases, you may be able to get a deal, like a preferential lower rate, if you are borrowing from the same bank where you are already a client, or if the bank wants to acquire new clients. What are the other bank commissions? This is a very important part, as the commissions might significantly decrease your capital gains. We are talking about transfer fees, management fees, conversion rates, investment fees, and more. Last but not least, compare with similar products from other banks. Compare with similar products from the same bank. Do not hesitate to ask questions if needed. Always read carefully any kind of contract or agreement before signing it. Do not take as granted a verbal agreement. When in doubt, consult your lawyer.